Roy, thanks for speaking with us today. And I guess I'd like to start with the most obvious thing, certainly the questions that we've received from people. And this is in context of the number of positive announcements that Argex has had over the past several months. The relationship with PPG, the supply and purchase agreement, your Bankable Feasibility Study, another recent announcement in regards to an organization that could take up to 25,000 tons of the TiO2 of Module 1, which would be half of the capacity of the first module. There are a series of things that are positive, yet we are seeing the company's value come down. The stock price has come down. What is happening? What are your impressions?
Well, as you noted, Grant, there's a number of very positive operational achievements that are taking place at Argex, and I think it's fair to say that you're going to continue to see more of these very positive pieces of news roll out over the next months. I think it's important to underline as well that when the analysts look at our stock and assess it, both John Highway at Byron and Ed Otto at Cormark have not only reinforced their buy recommendations but increased their target price. That being said, the stock has seen the effects of more sellers than buyers, and I think probably one of the major reasons for that is a initial sticker shock in terms of the capex on the feasibility study that we published a few weeks ago. I think that the quantum in itself seems like a large number when compared certainly to other capexes in the industry. It's not really that large, and I think people have to understand that in that capex there is a sizable amount of contingency as well, and we believe the real number on that capex could certainly be up to 25% less than what we're seeing in terms of that published capex number. The other point that I think is important as well is that feasibility study took longer than we thought it was going to take. The PPG announcement as well took longer than we thought it was going to take. I think there was a little bit of fatigue in terms of some shareholders, and in terms of getting those items out, those milestones completed. Two things. The main irritant in that was, as a small company, we rely sometimes on outside consultants. In both those cases, the outside consultants that we were using were unable to deliver on what we thought they could deliver on. So it was incumbent upon us to make changes. We've corrected that, so we don't think we're going to have that problem going forward in the future. But again, what I'd like to underline is there's very few companies out there, certainly at our stage of development, that has delivered on so many milestones and with such a high batting average as Argex has in terms of delivering on our milestones.
Okay. Before we get to how you turn around the situation and get people to perceive that there's a greater value in this company than is currently placed on it by the market, we have to talk about another item right now, and that's an overhang in the market. Not widely talked about generally in public circles, but well known at the same time, is that you're facing a situation where there are at least 6 million escrowed shares coming free trading early to mid-November. And this is with the group that originally received stock to sell assets to Argex when the company went public. So I also understand that you have tried in the past to purchase that block and were unsuccessful. And in fact, correct me if I'm wrong, you tried to purchase it at a much higher price than what they ultimately sold some of their stock for. So is there a way to deal with the overhang? Is there a way to bring some comfort to the buying sector at large? And how do you get these folks out of the way?
So our main focus at Argex is moving ahead operationally and getting into production. However, we realize in order to do that, we have to make sure that we have an orderly market that supports what our ultimate goal is. That's why at our AGM we had a vote of disinterested shareholders that would allow us, before that escrow is up, to move some of those shares. And over 40% of those shares that were under escrow have been moved to safer hands. There are some groups which we determined were at high risk of moving or of selling those shares, where a large proportion, or in some cases all, or in other cases virtually all of those shares have been moved. In other cases, we had direct conversations with the decision makers of the companies that own those shares, and we were informed that they have no interest in selling their shares. So we feel that a lot of these shares are actually in safe hands. And in other cases where there were large blocks which we were thinking should or could be moved, we approached the holders, and we were essentially told, no, we're not looking to sell at this time. We're holders because we think the share price should increase. So we've been actually quite vigilant behind the scenes in terms of tracking the opinions of those shareholders in terms of what they want to do with their shares. And right now we're pretty confident that the holders of those shares, or the vast majority of the holders of those shares, are not short-term sellers.
Okay, everybody knows what the end game here, and that is for you to be in production in 2015. And correct me if I'm wrong, the facility should throw off in excess of $100 million in free cash based on the information that was provided in the Genevar report and the Ernst & Young calculations in the Bankable Feasibility Study. So if you look at $100 million in free cash a year, that's a pretty big number based on your current share structure. But obviously that's not being reflected in the value. So the market is saying, well, there are a lot of things that have to happen before we get to that point. So if you can look at the next 6 months or so, what are the value creators, the value drivers that are going to point to a successful outcome of you going into production and reducing your risk profile at the same time?
Grant, you're right. The math on our process, on our project, is very attractive. We're talking about an IRR of in excess of 40%. We're talking about a NPV of close to $1 billion. And let me just note that we feel that there are continual improvements which we will make that will actually improve both the OPEX and the CAPEX. And I think that our continuing focus on the optimization of our project will demonstrate that the math is even more attractive than what we've just described. That being said, as we move towards production, I think there are some elements that I think will be seen as de-risking the project for the market. And essentially here at Argex, what we've always said is that our primary way of creating wealth for our shareholders is by de-risking the investment. That includes bringing some people onto the team that are going to be required in order to successfully build the plant in the timeline that we set out. We'll need a deeper bench. What we've done to date with a relatively short bench, and I think everybody can be proud of the job that's been done with the limited number of team players that we've had here at Argex. I think as well you'll see further and deeper participation by strategics working with us, not just PPG. Everybody is aware that we have a technological agreement with PPG. Everybody is aware that we have a purchase agreement with PPG. I think you're going to see other strategics start to play in what we're doing as well. And I think that the other thing that's important for all shareholders to realize when we're talking about a project with such attractive math is that it's not necessary for Argex to go out and do some massive dilutionary equity raise. That's not our strategy, and that's not our focus. We've said, or at least in the last 4 or 5 news releases that we put out, our intention to work closely with Investissement Québec, which is one of our strategic investors. IQ, as some people might know, is one of, if not the most important project finance provider in the province of Quebec, providing debt and loan guarantees and other items that will mean for our equity shareholders that they're not going to see a massive dilution. Here at Argex, all management is also shareholders, and we don't want dilution any more than anyone else. Equity in this project will be the last money in. Before we do that, we're going to look at project-level financing to ensure and give reinforcement to our shareholders so that they understand there won't be any more dilution than necessary in a project like this. And given our numbers, I think that should be pretty constrained, the amount of dilution they'll see. And I think once they start to understand that, then I think the average shareholder should have confidence as we move forward that not only is the project going to be done on time and on budget, but it will also be done with the minimum amount of dilution possible in the context of a market like we have here today.
I would presume that your ultimate market has got to be a listing in the United States and to access that large buying group that's in the United States. Now, I understand that over half of Argex stock is currently held somewhere south of the border in the U.S., but to get to a U.S. listing, a senior U.S. listing, you're going to have to achieve certain things in valuation. So one, the presumption being you would like to obtain a senior U.S. listing, and then what do you think has to happen for you to be able to achieve that?
Well, we believe we've already taken significant steps towards that long-term plan. Firstly, as you know, listing on the TSX Senior Board gives us better visibility in the U.S., and it also allows us to have the credibility to go to senior exchanges in the U.S. And as you may or may not know, there's a multi-jurisdictional disclosure agreement between the U.S. and Canada, which makes listings that much easier. So we're already thinking ahead in terms of looking down the road and where we'd like ultimately to be listed. I think what's important as well is, as you pointed out, in 2011, 90% of our shareholders were Canadian, and at that time we were really seen as a mineral exploration company. Today, over 2/3 of our shareholders are in the U.S., and probably close to 85% are international, and that is that parallels our transition from being a mineral exploration company to really what we are today, and that's an emerging producer of specialty chemicals. And the real market for that, both in terms of investors, but also in terms of clients, is south of the border. So ultimately, I think it makes intuitive sense that we are becoming more and more an American company, and access to those U.S. markets become more and more important to us.
Roy, thank you for talking to us today, and I believe this should clarify some key points for investors. Thank you.
I appreciate it.